This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, July 17th, 2022. And then this is the weekend video update for Canslim growth stock investors through my two meetup groups, the Greenville Eastside IBD meetup group and the Stockyard meetup group. As always, educational purposes only, not recommending any stocks or securities to buy or sell. And we know certainly in bear markets that all investing has substantial risk of big losses. So we want to learn first and only then invest. So today we'll look at the M factor, very important currently. We'll talk about what we see this past week, constructive action or destructive action. The hint is we're still doing the hokey pokey with the moving average lines. This follow through day, I have some comments on it. The most recent one, really off to a slow start with some weak signs and signals. And then I'll touch on our monthly meetings very briefly. So the M factor, as always, the most important letter in Canslim. When you're wrong on the M, nothing else can be right. If we review it currently, we want to diagnose, we don't want to interpret, we don't want to predict what is going to happen over the next couple months. We look at three things: the actions of leading stocks, seeing less setups, and more significantly, the breakouts we're seeing are really struggling, and we're going to look at those charts. Actions of stocks owned, any slowly weighting back in the group teaching portfolio gets hit with whack-a-mole. EVH got hit after it broke out. TAN showing weakness, so just not good there. Then we'll look at the market pulse, distribution day count, price and volume on the indexes, all of which is tracked in my coloring book. So let's get out of here and just jump right into MarketSmith and the index charts, get up to the Nasdaq. We'll start there. So here's the daily. Here's the last follow-through day. That was the one on the 24th, and that was Friday, and that's the one that has the asterisks. That was the sixth follow-through day in this bear market, and the asterisks were because the volume ran lower all day, and then we had Russell rebalancing at the end of the day, so the volume only came in the last 5 minutes, and it was only driven by that Russell rebalancing. So that was the asterisk. And you can see the action's been poor since then. Look, most of the trading is under it. Right here, we undercut the follow-through day low, which gives us a 90% chance that this follow-through day is not even going to work, that this rally is going to fail. You can see the indexes here battling at the 10 and the 21-day moving average lines, finally gets above them, bumps its head on the 50 this week, slammed back below all of them, and then came back, on Friday, lower volume, back just above the 10 and 21, just struggling at that 50. S&P 500, I did mark the follow-through day on here also. Again, you can see most of the trading since the follow-through day is under the follow-through day close. We don't want to see that. This one has undercut the follow-through day low. NYSE didn't mark the follow-through day, but same bad trading, back under all moving average lines. Dow, again, the hokey pokey at the 10 and the 21 day. Here's the follow-through day. Most of the trading's under it. Closed below the low of the follow-through day right there, over 90% chance of failure. Russell, looking weaker, I think still, or at least as weak. Again, it's just back battling the 21 day, again, gets up to the 50 day and just runs into just strong resistance. And S&P 600, back under the 21 day, really can't even get above the 21 day. So it is struggling also. If we jump over to the coloring book and look at this graphically, so this week we had 4 selling days, and some of them were official distribution day. Actually, 3 of them were official distribution days, I think. I'll go back and double check that. So we currently, in the IBD count, we have 1 on the Nasdaq, is right there, and then 4 and 5 on the S&P 500 and the Dow. If we use the whole 25-day window, we have 4 on the Nasdaq, 8 on the S&P 500, and 9 on the Dow. I know that's not how IBD counts them, but I do look at that and count them that way. So here was the follow-through day all the way back here on the 24th. And if we look at the coloring book, this only shows Canslim breakouts or early entries in bold, underlined, dark green. I mean, we don't even have, nothing happens. The follow-through day is way back here. We don't have Canslim stocks breaking out at all. have an early entry. So we'll look at these. I put these in a list in a little more detail. So EPS season's getting ready to ramp up. The Fed meets 1 week from this coming Wednesday, or the results come out. They meet Tuesday and Wednesday. And then the Fed hike history, just so we can track it, I've stuck that in here. So been at 0.25 or a quarter point, effectively zero, when the Fed had to stop that coronavirus train wreck of a bear through everything they had at the market in way of rate cuts, including an emergency 1-point rate cut on a Sunday afternoon. I think that was March 15th of 2020. You know, you had quantitative easing, you had the checks, the coronavirus relief. So this year on the 16th went up a quarter point, so that puts the Fed funds rate at 0.5. On May 4th went up a 0.5 point, puts it at 1%. On the 15th of June went up 3/4 point, and then it looks like we're at least talking about 3/4 point coming up a week from Wednesday. So still a lot of negativity and pressure coming. We don't want to fight the Fed. We don't fight the tape. And so both those are very difficult right now. So go back over here. Oh, sorry. I got to do the group teaching portfolio. I had to open it. I think I closed it by accident. So terrible week. Took a big hit, had distribution days, down 13% year to date, 24.4% cash invested on a cash basis, no margin used. So basically 75% cash. And that seems about right in this difficult market. Could be less. You could still be sitting in cash, waiting for the indexes and the stocks to show some strength. I think that would be perfectly fine. Matt Caruso has the sort of, his thinking on the percent invested now would be between 0 and 30%. So, and Market School, I didn't cover that on the coloring book, but they're still at 0% invested under their model. So covers that. Go back to our slideshow. Oops, I don't know why that started over. Sorry. Okay, we covered all that. So my sort of overall take, still a whipsaw market with a lot of flaws. We're seeing strong opens fade. We're seeing up days in the indexes on weak volume, not many setups, and the ones that do break out are not making much progress. So let's look at everything I have in the coloring book as a valid early entry or a breakout for Canslim investors. So overall, we had that follow through day on the 24th. I explained that. So it was at least 7 trading days later, and then CELH had an early entry on day 8 after the follow through day, and I started counting on the follow through day, I think. So Funko and EVH broke out. These both failed, would have triggered 7% stop losses or 8%. Halo broke out on day 9, is pulled back. CFLD broke out, that was holding okay. Day 10, Ccrn, this was an early entry. It was thin, so it's under, I guess, about 10 or 11 million per day, so not even something I was looking at. And then day 11 after the follow through day was just this past Friday. We saw OPCH break out. So let's go back to Market Smith. I put those in a list for you. I don't know why. I must have closed everything. Sorry about that. So here's that list. So these are the stocks I just showed you. So these are the only breakouts I have on my list. IBD may have more breakouts because they're not strictly requiring, Canslim earnings and sales on some of those. They may be losing money. I just want to study the ones that meet Bill's criteria. So here's CELH. Here's the follow through day. I marked it in orange. And then you could have had an early entry. You could have had sort of a horizontal trend line almost, like David Ryan talks about. So you could have had an early entry there, and that one does have Canslim earning, amazing triple digit, earnings and sales for the last 2 quarters. So strong there. Then Funko. So this one broke out over here's a follow through day. It breaks out over here, boom, goes down, triggers you out. Again, does have Canslim earnings and sales. EVH, again, here's the follow through day. It should be an orange arrow. It changed the color. Sorry. Here's the breakout. It failed. We actually tried that one in the group teaching portfolio, got stopped out. Halo, here's the follow through day, had some early entries. It breaks out, has 2 really strong days, and then it hasn't failed. It pulled back to the 21 day. We do know that 40 to 50% of valid breakouts do pull back to the pivot point. This one pulled back a little bit lower. The only encouraging thing, I mean, the breakout volume was really strong. The day after was really strong. And then this was a bad week, and it pulled back on lower volume. And if we look at a weekly chart, looks a little bit better. So the week it gapped up, it was up 16.4%, and this week it gave back 5% of that. And finished about mid-range, and volume was lower. Also, the week it broke out, this high volume week was only 4 trading days. We had a holiday on Monday, so that's nice volume when we dig down into that. But again, just not taking off and going like we would like to see after a follow through day. Here's Clearfield. So here's the follow through day. You could have drawn a slope and trend line, or if it took the breakout, which breakouts aren't working well in bear markets, we know that. It's making a little bit of progress, but then it has earnings coming up. So would you have enough cushion? It's up 9% from the pivot if one was in that to watch it. Ccrn, this was a thin one. Okay, yes, 12.3 million per day then now. So here was the follow through day. Again, you'd have to draw a horizontal line, or either, this isn't a valid handle at all. So I would think the entry would have been in here somewhere if one was going to try that. But again, it's thin, so it's not on my top tier watch list. And then OPCH actually broke out Friday, could have drawn a sloping trend line, trades 34 million, and has good on the weekly. Yep, has good earnings and sales, and a stage 1 cup. So it'd be nice. I mean, maybe it's going to form a high handle here, or actually 1, 2, 3, 4. You had a handle. I would consider that a valid handle. So, and here's the follow through day back here. So there's a few, but I mean, that's only 7. At least 2 of them have clearly failed. One of them's thin. So that's just a small group of opportunity after a follow through day. So we'll just keep an eye on that. Okay, we covered those. So overall on the market, sort of the same signs I had last weekend. Proceed with caution, speed bumps ahead. Again, people may be 0% still, and that's fine. And I also think there's some red lights, and the red lights would be, I'm going to control risk by only being X% invested. Like I said, each investor has to make their own decision. I agree with what Matt's saying. I don't think that's more than 30% of your portfolio at this point. Invested and just say, hey, I'm just stopping there until I see improvement, I get some good signs. And maybe also, if you're well under that, maybe you're 10%, no trading until whatever you have makes some progress to the upside. So those are just some thoughts on that. Don't want to feed the bears. Don't give them your physical capital, your mental capital. They're going to eat everything and come back for more. The big advantage Canslim investors have and individual investors is to be not invested or lightly invested. So protect mental capital, protect fiscal capital, and be good to go when we do get a new uptrend and the market is actually turned, because it could be very nice. Again, we may get a severe leg 3 down still, but when it comes out of that, the worse the bear, the better the opportunities when it comes out. And then I talked about the medical area. It seems to be the one showing early strength. Last weekend, I looked at the IBD 50 and the top industry groups. We saw a lot of medical strength. It's still showing that. This weekend, I had like 21 stocks so far on my first pass watch list, and 2/3 of those were medical or medical related. And I include biotech in that when I say medical or medical related. And it could be some of the health insurers. Those are all tried to medical, which is sort of a recession-proof area because people don't quit spending on healthcare; they quit spending other places. So this weekend's paper, just to kind of show that theme's continuing. This is the stock spotlight. So there's 16 charts in there. 1, 2, 3, 4. So 7 of them, almost half, are medical related. So that's kind of just again showing more strength in that sector than anywhere else. A few weeks ago, it was obviously the commodities that were doing well. If we look at leaderboard, we see the theme confirmed. There's 4 stocks. They have leaders near a buy point. They're all medical. And then on the leaders watch list, they have 2 and one of them's medical. So you have 5 out of 6 are in the medical sector. So that's the one to keep an eye on, it seems. Our monthly meetings. So we met this past Tuesday. So several of you attended. I think it was helpful. It was helpful for me. We spent 2 meetings looking at the 2000 to 2009 financial crisis bear market in detail. First meeting, we walked through it almost day by day, and it was draining. You almost could feel the pain. So that one, you remember, went down almost in the 57% range on the Nasdaq. This was the last real bear market that we had. The fall of 2018 bear was only 4 months long. The COVID bear was only like 34 trading days long. So really the last significant bear market, we have to go back to the financial crisis bear. Interest rates have been accommodative since then. That's when they became low, and then they went up a little bit, and then were knocked back down during the COVID bear. And so this month we walked through in detail and looked at the news events, what was happening in the headlines with the financial crisis leading up to the failure of Lehman Brothers, but not the failure of AIG. The car makers being in trouble in that time and having to get rescue packages. So we looked at all the bad stuff to kind of see what our headlines look like today, what sort of headwinds is the market facing. And then we also looked at some of the key leaders coming out of that and how well they did. So that's what we're looking for now when this ends, be it next week, next month, or sometime next year. So we don't know. And I just mentioned the EV space briefly. We did talk about Halo, why that was a high conviction stock, and some of the due diligence on that, and the IPO market was still dead. And then we looked at stocks people wanted to look at. So our next meeting is Tuesday, August 16th. You register at the Stockyard Meetup site. Meetings are $12, but they're all recorded. You get the recording, slide deck, links to any articles we talk about during the meeting. If you're a first-time person signing up, you get the prior month. I just send it to you as a courtesy copy so you can catch up and see what we do. So the meetup sites, it closed them too, sorry, but it's the Greenville East Side and the Stockyard. Just go to meetup.com and you can search for them. Let's go back. So prior meetings, have those available. If you're interested in those, people can order those. If you don't have written sell rules, we spent 3 meetings covering that. Those are very valuable. The prior ones are $15 and include everything each. And then if you don't have a good weekend routine, we covered that in detail in September and October. And then recently we've been doing the bear market walkthroughs like we talked about. So there's contact information. You can email me if you have questions. You can follow me on Twitter. Stockyard YouTube page is where you are now. These videos are uploaded. There's teaching there on how to use the group teaching portfolio. If you're not keeping good records, you can use that, and I tell you how to use it. And we just make that available. There's a meeting for May 2021 in there on full. The 8-week hold rule presentations in there. The bottom basis versus bottoming basis, what the difference is in Canslim. There's a video on that in there. So that's it. Hope you guys have a good weekend review. Should be an interesting week ahead, and see you next weekend.